It's interesting to me that, the way the market has behaved in the last several weeks, but even going into the election, was we need to own more cyclicals, we need to own more financial stocks. We're going to reprice this market for maybe a growth acceleration even, or at least maintaining above trend growth. Meanwhile, though, we're only a couple months removed from a pretty big growth scare. Job growth has kind of slowed to a point. The housing market seems pretty locked up. It's kind of interesting how the sentiment has kind of jumped ahead. Is the economic numbers positioned to actually validate that view?
Markets tend to be forward-looking, so I would expect this. I know there has been a recession in durable goods and in housing and auto sales, principally because of high rates, which have made affordability an issue. That's really on the come next year. I mean, I think the spread of 10 years and mortgages should come down, and the 10-year hopefully behaves. And I think if there's more confidence and more supply, I think housing actually could lead this recovery. I mean, I think that's why home builders actually started to act better this week as well.
Tom Lee of Fundstrat Capital discussed his optimistic outlook for 2025, driven by factors like a pro-business administration, a dovish Fed, stable interest rates, and ample cash on the sidelines. He believes these elements set the stage for continued market growth. However, he highlighted potential risks, such as uncertainties around trade policies, tariffs, and federal spending cuts, which could impact GDP growth and increase market volatility. Lee also pointed out the ongoing debate between investing in tech stocks like Nvidia versus cyclical sectors, with some favoring AI-driven growth while others bet on recovery in industries like housing. He emphasized the need for caution and tactical investment strategies as the market faces uncertainties heading into 2025.
So we can stack up all the positives. I mean, I know you've been kind of in gear with that idea that the economy would power through, inflation would come down, the Fed could become friendlier, earnings are going higher. Big question to me is, how do we set expectations for the year to come, given that that's all in the books?
It's a great question because, we have two back-to-back 20% years, and now investors are wondering how much good news is baked in. But if we look at the 2025 environment, it's a great setup because we have a new administration coming in that's maybe pro-animal spirits, a Trump put. We have a dovish Fed, and as you're pointing out, interest rates are kind of calming down after rising. And we know there's still $7 trillion of cash on the sidelines, and I think sentiment's coming back into check. You mentioned that before with the AAII numbers. So I think it's a good setup for investors. I wouldn't be too worried about the next 12 months.
So don't be too worried. I mean, it seems that there are all these supportive factors, and when you mentioned the 20% up years in a row, history says actually, the following year is up more often than not as well. What do you think specifically by the new administration being pro-animal spirits? First of all, it's true.
Yeah.
You've kind of seen it at work. It seems to pull in that direction, but are there specifics that the market is fixated on that it's going to drive that dynamic?
Yes, I think that the market's trying to figure out exactly how this animal spirits plays out in markets, but I would say we've got a Treasury Secretary that equity markets approve of. We do know that the last Trump presidency cared very much about what stock prices do, and Jeremy Siegel said this is the most stock market-focused president ever. And I think that the uncertainty is around trade and the potential risks around tariffs, but we'll have to see. I mean, that's something markets are going to have to deal with it from an uncertainty perspective.
Okay. All right. So, Kevin, you've been very agreeable up to this point. What about when you take a look at technical levels for Nvidia? Do you share the same sentiment? Do you see where Don's coming from?
I see where Don's coming from. It's a very hard stock to fade, though. So let me hedge my bets here when it comes to the technicals, because once again, you do have a lot of this enthusiasm when it comes to artificial intelligence. And Nvidia has been utilized as a flight to safety type of trade here if we do see some volatility in the broader market. But the reason why I will say that he may have a point here is that we actually have some divergences actually taking place for the RSI. We'll start at point A. Point A, we saw this divergence on the RSI where it's making a lower high and making lower lows, but the price for the most part was actually kind of staying stagnant. We usually have a double top pattern, and then we see a pullback. So those purple lines are kind of associating with the RSI divergence, and then when we actually see a flush, we could see that back in February of this year. We had the same type of scenario taking place in late June, and then we started seeing the flush basically in the middle of July. And right now, we actually still have that same type of divergence. If you kind of look at around October 17th, RSI has been actually making lower highs. on a relative basis and making lower lows. But if you look at the price action, it's been able to, for the most part, hold up. Now you can have a consolidation in time or you can have a consolidation in price. You got to kind of pick your poison there. But if we do see the same type of trend like the previous two over this year, you would expect maybe a pullback in the name. And if we do see a pullback, the first area of support is going to be $130. The next one that you're going to be looking at is around $117. That's fairly aggressive, but once again, the divergences usually resolve themselves one way or another. Now, if you're a bull, you have that MACD actually kind of curving to the upside here, trying to hinge a little bit higher. So that kind of gives you a little bit of conflicting data sets. And you also have that bullish ascending channel that's taking place right now. So respect the channel for now. 150 could be an area of resistance. A lot of options activity sitting there, but I understand the reason and his thought process when it comes to potentially a fade. But if it does happen, Caroline, these fades are generally fairly quick, and you do see some buyers actually stepping in aggressively. So you probably got to be tactical if you are trying to short the name.
Yeah, it seems like anyone says, so many people that we talk to say buy any dips on Nvidia. I was taking a look, 91% of analysts have a buy rating on it still, despite this impressive run higher, and median price target 12 months, but 175. So just throwing that out there, Don. I know that these are trades, though. Just want to give you final thoughts, Don. You talked about some potential volatility over the next few weeks heading into year end, that Santa Claus has come and gone. But when you think about 2025, where do you see this market going?
Yeah, the first thing I want to address there is 91% of analysts. When you have that many analysts on one side of a particular trade, I'll take the other side all day long over there. Into 2025, one of the first things that you want to look for, again, is volatility actually picking up. That's one of the concerns. I mean, one of the things that people have really pushed aside, I recognize there's a new administration coming in, but we could be looking at spending cuts, federal government spending cuts, amounting to what, 1.5, maybe $2 trillion. I mean, that's ultimately what, Elon and Vivek are actually looking at right now. And I don't think that markets are actually pricing that in at this point in time. It's a huge consideration moving forward. We're talking trillions of dollars of cuts, and that is literally bottom line into the GDP. Look for volatility to really pick up, and we start hearing more about some of the cost cutting.
Yes, they seem very sensitive too to yields, sort of halting their rise as well. I guess the question is, if we believe it's still a supportive environment and pretty much all the things you can identify would suggest you shouldn't be too worried about next year. The second question is something like the S&P 500 the best vehicle to capitalize on that?
I think investors are still trying to figure this out. We did a survey with our institutional investors and our RIA clients last week. The majority of institutional investors don't think FANG is the leading trade. They're actually betting on cyclicals. But if you look at the RIA world, the majority are betting on FANG. So I think the market is still undecided whether to be long the Mag 7 or the cyclicals. I'm inclined to be more cyclical and bet even on small caps having a very big year next year.
Yeah.
All right, Don, ever the contrarian, and your final trade is Nvidia. Are you one of the lone people betting against Nvidia? Walk us through this trade.
Yeah, it's time. It's time. So I've actually taken some shots in Nvidia, over the last few months to actually look for the stock, both higher and lower. But right now, for the first time in a very long time, I think we could fade, if you will, in Nvidia, or not necessarily be so bullish. So the first thing I'm going to say is that I'm going to be selling a very slightly out of the money call spread here. Is it an outright, bearish trade? Yeah, as long as the stock does not continue to appreciate to the upside, this trade could be profitable. But I think Nvidia, for the first time in a long time, is going to be facing some competition, specifically from Amazon. Obviously, we've heard about the deal where Amazon has actually been signed on by Anthropic to actually build, again, one of the largest AI clusters out there in a supercomputer. And that's business, again, that Nvidia is not going to have. I think the entire industry is looking that way right now. Although we still see some price appreciation inside of Nvidia, I think it's going to be rather muted. As such, I'm just going out to the Jan 17 expiration. Again, I'm going to be selling the call spread, and that is going to be selling the 145 calls, buying the 150 calls. Again, selling the 145 calls, buying the 150 calls. This one's done for about a $2 credit. So I bring a credit in. Anything below 145, and we're golden in this particular trade, but that's actually the key right now, is to actually slow, if you will, some of the momentum that we've actually seen in Nvidia in the last couple of weeks.
Tom Lee of Fundstrat Capital is optimistic about the market in 2025, citing a pro-business administration, a dovish Fed, and significant cash reserves. However, he warns of potential risks such as trade policy uncertainties and federal spending cuts that could increase market volatility. Despite these concerns, Lee believes the market is poised for growth, but investors should stay alert. Lee also discussed the divide between investing in AI-driven stocks like Nvidia and focusing on cyclical sectors like housing, advising caution and strategic positioning for 2025. You agree with Tom Lee's optimistic outlook for the market in 2025? Which sectors do you think will perform best in the coming year? Cyclical industries or tech stocks like Nvidia?